welcome to Vision Economics Academy. In this episode, we'll be covering Unsolved Practicals, Value Added Method from the Macroeconomics book of Sandeep Garg. This is pertaining to the syllabus of Class 12 CBSE, Chapter number 4, National Income Measurements. In our previous episodes, we have already covered the theoretical aspect of it, the technical aspect of it, and all about the components and technical terminologies. Now we will dive into the practical aspect of it. We'll be covering all the numericals. And as far as numericals is concerned, students, you have to be very honest, and practice is the only answer. The more you practice, the more you will remember as to what you need to add and as to what you need not add and why as well, right? So without further delay, we will start. We will read the questions properly. So now let us read the first question. In an economy, following transactions took place. Calculate value of output and value added by firm B. So we only have concerns regarding firm B. And what we need to calculate is its value of output and value added. Now, what all are given here? Firm A sold to firm B goods worth of 80 crores. So this becomes the purchase by firm B. That's worth rupees 80 crores. Now this will be considered as intermediate cost. Right? Then firm B firm B sold to firm C goods worth of 70 crores. Now this will be under sales, right? To firm D, firm B sales worth rupees 40 crores. Goods of value worth 30 crores were exported. So firm B only exports goods worth value 30 crores and goods of value of 5 crores were sold to the government. Government is also a consumer, right? Now, you may wonder why I did not mention about this part. Now, firm A sold to firm B goods worth of 80 crores has been already written here, that it will be the intermediate cost of firm B. Now, what firm A has sold to firm C and to the household, and what value of goods has remained unsold for firm A is not our concern, because what we need to find is value of output and value added of firm B only. Okay, so as we know, value of output is sales plus change in stock. Right? Now, what are the values that has been sold? 70 crores plus 40 crores plus 30 crores plus 5 crores. These are all comes under the sales by firm B. Now, there is no change in stock. Change in stock is not given in the question, right? So we will just add all this. 70 plus 40 plus 30 plus 5 will give us rupees 145 crores. So that is your value of output, right? So therefore, value of output is rupees 145 crores, right? Now, number 2, they have asked us to find value added. The value added is value of output minus intermediate consumption. This is also consumption. Sorry, I have written cost over here. All right. Now, we already know value of output is 145 minus what B has purchased from firm A is worth rupees 80 crores. Now we'll subtract 80 crores. Then we will get 65 crores as answer. So therefore, value added by firm B is rupees 65 crores. So this is as simple as possible. I will not dive into too much detail about the explanation of the formulas because I have already done that in the previous episodes. Right, and I've explained here also what value of output comprises of, right, and what value added comprises of, and we have straight away got the answer, right? So let us move to the next question, that is question number 2, right? Now let us see what is asked in this question. Now this question has two parts again, value added by firm A and firm B, right? First we'll see for firm A, then we will see for firm B, right? So sales by firm A, right? So sales is rupees 100 crores. Purchase by firm B, purchase by firm A from firm B. So this is intermediate consumption, that is purchases by firm A from firm B is rupees 40 crores. Then what we need is opening stock and closing stock, because we know that value added is value of output minus intermediate consumption. Now what is value of output? It is sales plus change in stock, right? So this is the basic structure. Now we have sales, we have purchases. Now change in stock. Change in stock is closing stock of firm A minus opening stock of firm A. So number 5, closing stock. Okay, and that is worth value 20 crores. Then opening stock is 25 crores, right? Now As we have already discussed, value added is value of output minus intermediate consumption. First we need to find value of output, then we'll find value added. Now value of output equals to sales, that is worth 100, plus change in stock is closing minus opening stock, that will give us 95 crore. Okay. Now value added by form A is value of output, that is 95, minus intermediate consumption, that is 40. So which will give us 55 crore. So we have got the value added by form A. You can quickly take the screenshot of it. Okay, first step here, then second step is here, then the third step is here, right? Okay, so as I've finished taking the screenshot, I'll just erase this. Now part B of the question. What we need is value added by form B. So form B, the sales by form B needs to be added, right? So we'll first write what has been given. We have purchases worth 60 crores by form B. We'll also write its number beside, right? Then we have closing stock of form B and opening stock of form B. Now closing stock, $35, and opening stock worth 45 crores. Okay. Now value added, we know, is value of output minus intermediate consumption. Now what is value of output? Value of output is sales plus change in stock, right? So sale is 200 plus change in stock is closing stock minus the opening stock. Okay, so this gives you value of output minus intermediate consumption is 60. So 200 minus 10 minus 60, right? So 200 minus 10 is 190 minus 60, which will give us 130 crores. So therefore value added by form B is worth rupees 130 crores. Okay, all right, quickly take the screenshot of it. We'll proceed to question number 3. Calculate net value added at factor cost from the following data. Now NVAFC is nothing but NDPFC. It's same, right? Now We know value added or gross value added at market price is sales plus change in stock, which is nothing but value of output minus intermediate consumption. So this will give us value added, right? Now, from GVA MP, if we want NDPFC, from GVA MP or GDP MP, if we want NDPFC from gross to net, we subtract depreciation, right? And from MP to FC, we subtract net indirect taxes, right? So, first sales 200 plus change in stock is directly given here 10, right? Minus intermediate cost or consumption, that is 90, right? Then minus depreciation, depreciation is not given here, so will not include anything, minus net indirect taxes. So indirect taxes is there. So indirect tax, net indirect taxes is indirect tax minus subsidy. So since subsidy is also not given, we'll only take oh, okay, so indirect taxes is given directly, net indirect taxes. So as indirect tax is given here, subsidy is not given, so here the whole value net indirect taxes is given. So minus 12, okay. So 210 minus 90 minus 12, okay. 120 minus 12, that is 108 crores. Now, therefore, NVAFC is equals to 108 crores. All right. So let me explain this. NVAFC and NDPFC is similar. GVAMP we can find out by value of output minus intermediate cost. So sales plus change in stock gives us value of output minus intermediate cost. Then once we have derived GVAMP, from gross to net we have to subtract depreciation, and from market price to factor cost we have to subtract net indirect taxes. So we did that and we got the answer as 108 crores. So further we will be solving other numericals as well in the next episode. Till then, stay tuned and don't forget to hit the like button, subscribe and share. Thank you. Namaskar.